I believe that with the way things are shaping up right now, there's going to be a big crypto wealth transfer that's going to take place in the coming 5 years or so. And today, I'm going to be touching on 3 of the core reasons why I think this will take place, as well as who is going to benefit from this wealth transfer and who is potentially going to lose out. If you're interested on these theories of where crypto could go in the future, then stick around for the video. And without further ado, let's get right into it. So the first key point here is that fiat currency is continuously being devalued over time. So since the pandemic hit in 2020, we have witnessed unprecedented money printing by governments across the world, including some of the most powerful countries like the USA. The amount of new US dollars that have been printed has been astronomical, and the M1 money supply has increased from $4 trillion in January of 2020, which was just before the pandemic, to a jaw-dropping 20.6 trillion today. Now, this insane increase in the number of dollars in the M1 money supply has seriously harmed the US dollar and has devalued it as an asset significantly. Now, partly as a result of this money printing that's taken place and the devaluation of the US dollar, we are seeing inflation rising rapidly across many parts of the world, exceeding any levels that we've seen in recent decades. So inflation was officially reported at 8.5% as of March of 2022, which was significantly higher than the inflation that we experienced over any period of time for the last 40 years. And inflation has almost always been below 5% for the last 40 years. And you'd have to go back to around the mid-1980s to reach similar levels of inflation. So as a result of the constant inflation in fiat currency throughout history, the purchasing power of the US dollar and other fiat currency is constantly falling over time. So that means that $1 will buy you less now than it could have 10 years ago, and significantly less than what it could have bought you 50 years ago. And if we look at an index value chart of the purchasing power of the US dollar, it is clear to see that holding fiat currency historically ends up losing the holder purchasing power as time goes on. So Bitcoin, on the other hand, is deflationary and is not like fiat currency. So how does Bitcoin solve the problem with inflation and the devaluation of the US dollar? Well, firstly, Bitcoin is limited to a supply cap of 21 million coins in total. So one of the main problems with fiat currency is that there is absolutely no cap on the supply of total currency that can be in circulation. And this allows those in positions of power in the government to control how many new currency units are generated every year. With Bitcoin though, the supply cap is 21 million, and this is hard-coded into the Bitcoin network, which means that all users can rest assured that no bad actors will be able to generate additional Bitcoin and therefore can't devalue and dilute the existing Bitcoins that are held by people right now. As of today, there are 19 million Bitcoin in existence, or roughly about that amount, and the remaining 2 million will be mined into existence over time. Now, as of today, there are 900 new Bitcoin being mined every single day, with this number being halved every 4 years until the 21 million limit is reached. And this means that the final Bitcoin will be mined in the year 2140. So that's quite a lot of time left until the last Bitcoin is mined. And the daily increase in Bitcoin is gradually going to drop off every single 4-year interval. On top of this, it is widely accepted by blockchain analysts that a considerable number of Bitcoin have been lost or are now unrecoverable. Now, this is because years ago, when Bitcoin was worth a lot less, it was even worth sort of cent on the dollar back in the early days. Many people were quite reckless with keeping their Bitcoin safe, which led to lost passwords, passphrases, and also even hard drives. So this means that estimates on the number of lost Bitcoin range from 3 to 4 million in total. However, this number could be a bit more or a bit less. But obviously this means that the maximum number of total Bitcoin is therefore likely to be less than the 21 million that is the supply cap, and it's more likely to be between 17 and 18 million, which obviously makes the existing Bitcoin a lot more valuable, and that's great for people who are holding right now. Now, as a bit of an extra point on those previous 2 slides, there is a Bitcoin hyperbolic model that is out there right now. So this is a very interesting model that was created by Wicked Smart Bitcoin on Twitter, and I'll link this down in the description below. And this does just show how much potential upside there is for Bitcoin. And this model does predict that Bitcoin could reach $100 billion per coin by the end of the year 2029. Now this definitely may sound quite insane, to be honest, and completely impossible, but I do think that there is some merit in this model, and the concept of the model does definitely hold some weight. So the model does state that due to the forever rising value of Bitcoin and the forever declining value of fiat currency, there will be a day eventually in which nobody will want to exchange a Satoshi, which is a fraction of a Bitcoin, for any amount of fiat. And essentially this ties into the theory that fiat currency is continuously losing value over time, while Bitcoin, on the other hand, is continuously rising in value over time, meaning that eventually there will be a time when the exchange rate for one Bitcoin reaches an insane number of fiat dollars by today's standard. Now this obviously doesn't mean that one Bitcoin will have the purchasing power of $100 billion today, in sort of today's value of that amount of money, but it does suggest that as time goes on, hypothetically Bitcoin will reach this dollar value, even if it's worth drastically less in the future. So the final core point on why there could be a crypto wealth transfer coming in the near future is that institutional money is gradually coming into this space. So in the early days of crypto, the vast majority of trading volume centered around one or two main exchanges, and the infrastructure was just not there to make it a safe and valid endeavor for anyone who wasn't a retail investor, who was just looking to make a speculative investment. Price movements were insanely volatile, and a number of security incidents did happen as a result of the lack of safety and lack of infrastructure that was in place back then. Most famously, in 2014, Mt. Gox, which was the main exchange at the time, got hacked, and many people lost all of their Bitcoin at the time. Nowadays, on the other hand, there are dozens of exchanges with much better security measures and infrastructure in place. There's also more mature and institutional grade products available to buy and trade, and there's also far more liquidity to limit the crazy volatility that we saw in the past. Now all of this has led to the first steps of institutional money moving into the crypto space, and examples include the publicly traded company MicroStrategy adding billions of dollars of Bitcoin to their balance sheet, and also we've got Square and PayPal allowing users to buy, spend and receive Bitcoin on their platforms. Also, the Biden administration announced in March that Joe Biden will sign an executive order on ensuring responsible development of digital assets, which is likely to lay down additional framework for institutions to get involved with crypto investing, and in turn, hopefully making them feel more comfortable and confident with investing in crypto. And then on top of this, in the UK, in April, the UK government said that they are looking to take steps to position the UK as a global crypto tech hub. So two massive countries in terms of wealth there, both making steps towards bringing in more institutional money to the crypto space. The SEC is currently deliberating over whether to give a spot crypto ETF the green light, effectively allowing investors to hold Bitcoin through the ETF vehicle that can be traded on a stock market exchange. So crypto asset management company Grayscale, who are the single entity with the largest Bitcoin holding in the world, have been pushing to convert and upgrade their Bitcoin trust into an ETF. And if a Bitcoin ETF does get approved, then it is widely considered to be a very positive thing for Bitcoin, as it will give millions of people across the world more access to buy Bitcoin if they simply have a stock brokerage account, rather than them having to set up an exchange account and set up their own wallet. So it just makes it a lot more accessible for more people. So finally, I wanted to touch on this wealth transfer that could happen in crypto, as well as who will gain and who will lose from it. So crypto investors are pretty young, and according to a study by Stilt, a staggering 94% of crypto buyers are aged between 18 and 40 years old. Additionally, a CNBC survey found that 83% of millennial millionaires now own crypto, with 53% of the respondents saying that crypto makes up more than 50% of their total investment portfolio, and 33% of the respondents saying that crypto made up at least 75% of their portfolio. So the survey also revealed that 48% of millennial millionaires do plan to add to their crypto investments, while 38% plan to hold. So all of the crypto buyers are young people. However, a big majority of the US wealth in total belongs to those that are aged 55 and over. Now in total, these people that are aged 55 and older own approximately 73% of the total wealth in the US, while the under 40s, the very ages that are the most interested in crypto, only own 7% of the US wealth. So that is about 10 times less than the 55 and overs, which is quite insane, to be honest. Now, this therefore sets up a massive potential transfer of wealth into Bitcoin and other crypto. So the older generations will inevitably pass away in the coming decades, and therefore pass on their wealth, in a lot of cases, to their children or other younger family members. And we could therefore see a huge shift in wealth move from other investments like stocks and real estate into more millennial-friendly investments like crypto. So I have mainly focused on Bitcoin in this video, but it does also apply to the other cryptocurrencies as well. There's also often a correlation between Bitcoin and the other cryptos. So even though I focused on Bitcoin specifically in the previous slides, it is likely to have a similar impact to other major cryptos like Ethereum, etc. And that is all for today's video. I do hope you enjoyed my theories and thoughts on the potential crypto wealth transfer that's taken place. I do want to emphasize though that this is just my own opinion. This video is just for purely entertainment purposes only, and it's not financial advice at all. But if you did enjoy the video, please leave a like, as it does help out a lot. Also drop a comment, let me know what your thoughts are on this particular topic. Also be sure to subscribe if you want to see more videos similar to this in the future. And apart from that guys, thanks a lot for watching.